Welcome everybody to the 40 Finance channel, and today I'm looking at a few value ETFs, one each for bulls and bears and even the sort of fence sitters as I call them. These ETFs have some room left to run in my opinion, even in this current bull market that we're in with stock prices soaring. So let's jump in. All right, first one on the list, this is the one that I'm going to assign to the so-called fence sitters. So if you're a fence sitter, you kind of just sitting back, waiting to see what's going to happen to this market. Should I put money in? Should I take money out? Should I just go somewhere else entirely? If that kind of defines you and you're having trouble identifying whether or not you want to invest, then I encourage you to take a look at the Vanguard Russell 2000 Value Index Fund. It is ticker symbol VTWV, and this ETF sets to mimic the Russell 2000, and you basically get 2,000 of the best small cap stocks, regardless of their industry, all packed into one ETF. And you see over here, one of the reasons that I like it right now is it had a high last year in the neighborhood of $120. We're all the way down to $103.78, which is actually a good thing in the current market. So if you think of how much the S&P and NASDAQ have moved up recently, the S&P just hit new all-time highs. If you kind of look at this index and you see small caps have not done the exact same thing as the S&P 500. In fact, they've been dragging a little bit. And that's good news when you're looking at that as a category, because it gives you the opportunity with small caps to get in before they go on a run. So, and by mimicking the Russell 2000, I assign this ETF to the fence sitters because I think it's at a good price right now, and you've got a lot of safety and security for a long-term investment. I think it's still okay to buy some shares of this ETF, even if you don't really feel like investing because you're uncertain about the market. Over the long term, a small cap stock index like the Russell 2000 is absolutely going to go up over time, just like the rest of the market and the economy, inflation, and everything else. So it's a safe bet. You're not buying it at its all-time highs. And it offers a dividend of 1.89%. So that's a nice little bonus, give you some more incentive to invest. Okay, looking at the top 10 holdings of this ETF, we've got a whole bunch of small cap stocks. Some of them you will have heard of. Many of them, though, you won't, including myself. You'll have to research a little bit if you want to dig into all 2,000. I don't think that's necessarily the point here. The point is that you're getting the action of all 2,000 companies in the Russell 2000, regardless of their industry. You're banking on economic growth as a whole across business. And I think that that's a pretty safe bet for the long term. So take a look at this ETF. I think that it's a pretty good value right now, and it's relatively safe for the long term. Now, for the bulls out there, if you're feeling very good about the market and you think that it's going to continue to run up past these all-time highs we just experienced, then I found another value ETF right now, and that is the Invesco S&P Small Cap Consumer Discretionary. And with that, it's ticker symbol PSCD. And the reason I assign this one to the bulls is because consumer discretionary means basically you're in an industry where consumers have the option to participate. Think about theme parks and entertainment, things of that nature, but they don't have to. So you're looking for an economy where people have extra dollars, that wages are in a good place, unemployment's low. Honestly, a lot of the economic indicators we have right now here in America would lead you to believe that consumer discretionary is in a good place. And I think it can be. And if the stock market continues to go where it does and wages and unemployment stay where they are, then this is a great bull stock to get into. And the best part about it, the highs for this were in the neighborhood of $72 last fall, but like the rest of the small caps, it really just hasn't bounced back all the way like everything else in the market has. So sitting at $58 today, it does have a dividend yield of 1.26%. Let's take a look at some of the holdings. All right, so looking at the holdings for this ETF, again, consumer discretionary basically means optional purchases, and you see a few things that you can recognize on here: iRobot, Steve Madden, Wingstop, Top Build Corp, Strategic Education. So things that people would generally replace when they have extra money, so to speak. So that's what you're getting into on an ETF like this. And if you're feeling good about the economy, small caps are behind the large caps right now in terms of market wins. So if things keep going up like they are right now, eventually it's going to bleed over into the small cap stocks. And in this ETF, you've not bought low technically, but you've bought at a discount. So I would expect to see, if the bull case plays out, I would expect to see quick returns on an investment like this. All right, next up, I got a value ETF for the bears. And that is the same Invesco S&P, but this time we're talking about small cap consumer staples. Ticker symbol PSCC. And once again, we're in small cap stocks. They have not caught up to the trend of the rest of the market, so it's exactly where we want to be. This one trades right now at $73. It had a high of $87 over the last 52 weeks. So again, some room to run, but different side of the market. If you're into consumer staples, then you start to think about the bare necessities, laundry detergent, food brands, things like that. So this Invesco ETF offers a great bear hedge because typically when there is a recession, a lot of investors look for staples because they're sort of like guaranteed sales. You're not going to run out of a need for windshield wiper fluid, for an example. So you see a lot of money runs in to consumer staples during a recession, and that would drive the price of this ETF up. So if you're in the bear case, this is something to consider. All right, looking at the top 10 holdings for this ETF, and you have Darling Ingredients, which is a food ingredients company. Once again, you're not going to stop eating in a recession, and you can't eat unless you have all the ingredients, right? So Darling Ingredients, J&J Snack Foods. Snack foods aren't going away. WD-40 is another one. So I guess, people are still going to need to oil and maintain their homes. But you get the picture here. So a lot of solid companies, small cap companies that have not run up in line with the market. So if you're betting on a recession, you're going to bet on consumer staples as one of your options. This might be a good ETF for you. All right, guys, so there you have it. That is our 3 value ETFs, one for each side of the fence that you sit on for the upcoming economy. Hope you guys enjoyed this. Please like the video, share it with your friends, subscribe to the channel. I really appreciate your support. We'll see you on the next video.